Everyone, we got a pretty good sized group with us. It looks like we're grown to 23. I want to welcome you to the Hurley Investments Financial Services Commentary for Tuesday, the 27th. Last week, we ran into some problems with GoToWebinar. We were not able to hold our meeting, so we do apologize. Notes were sent out, but I'm going to go over all of this, all of last week's and this week's today. So we're probably going to take up a full hour. I usually start, are there any questions that you want to start out with? But let me go to a couple emails that came out to me over the week. Over the week, I had an email that came out to me that basically said, Kevin, would you be interested or could you start a chat group or a chat session where we can go over what's working, what's not working, where we can discuss those kind of things? And I'm going to make a comment, and I'm going to, obviously, I want to be polite. I don't mean this to sound rude, so if it comes off a little rude, please excuse me. I am not in education. I'm not in education. It's not that I'm not interested in helping you guys out, but I'm not interested in creating a chat session where I'm having people banter amongst themselves and so forth. I run these chat sessions for some CNBC commentary, for a radio show. I run it for my own blog site, but I run this more for my clientele to know what I see, to see what I'm looking at, to go over positions that are in portfolios. I do not mean this to be an education. For that reason, for a couple of you that have asked, could we turn this into a chat session? What's working, what's not working? That is not my intent. My intent for what I'm doing here is to let you guys know what I see and what I'm doing. So I'm going to apologize to those who have asked for me to do something like that, to turn that into it. That's not what I'm here for. And that is going to be something that have to be done through the Safe Option Strategies education. Maybe that's something you can bring up to Jeffrey Dunyan to create a live chat session of some kind, and understand that I'm not education, so that's not my focus. With that said, I would like to start tonight down on the very end, and I want to go over Warren Buffett's commentary. Anyone get to read Warren Buffett's yearly letter that he sends out? His Berkshire Hathaway shareholders letter. Anyone else get this or see this or read about it? I wait for it. No, I am not a Berkshire Hathaway stockholder. I don't understand, nor would I want to stick $168,000 right now into one share of stock. That doesn't mean that I don't look at everything he says in his letter. And I found it very, very interesting that he started out his letter reminding people that he's a value investor, and that with a $116 billion war chest, right now he is unable to find a good value in the stock market. Have I said that to you guys in the past? Have you guys heard me make a comment? You know, I don't see anything good right now. He went through a whole year without finding anything good. Pretty interesting. He had a $65 billion gain last year. He did not beat the S&P yet again for like 6 or 7 years running. But the reason why he didn't beat it on his earnings alone are because his gains came from a tax cut. In fact, pretty interesting that his tax cut or savings from his tax cut were the profits that that pushed him over an S&P 500 beat. So I just want to go through a couple things that I saw, and I'm going to start down at the bottom and work my way up, believe it or not. Succession plan, not important. Bonds can be risky too. I thought the comment that he made that high-grade bonds investment portfolio increased in its risk. We are kind of, at my opinion, an all-time high on bonds. We've run the bull market on bonds. I guess, can anyone tell me what's the problem with bonds right now? Why are bonds too risky and not necessarily a good place for money? Okay, David made the comment. And David, you're kind of wrong, because in all honesty, if you were to get into bonds now, you might catch the upside run of interest rates. So the problem is, and I saw another one too come up, interest rates are going up. What's the problem with interest rates going up? Value at the drop in increasing interest as yield needs to follow the rising interest. The value of bonds, there you go. So here's the problem. If you were to buy a bond today, I think you buy it at a little bit of a premium. They trade at 99 and I think 73 cents or what have you. But you'd probably buy the bond at $101 for, actually $1,010 for a $1,000 bond. It's going to pay you 3% in interest, roughly 2.94, something like that. And you're paying a little bit of a premium, 1% premium, so to speak, for a 3% bond, and you're going to have to pay a bondholder. So for all intents and purposes, your first year and a half out of 30, you're not going to receive any profit. But for the next 28 and a half years, you're going to do great. You're going to make great money. The problem is, can bonds possibly trade as high as 4% in 18 months? There we go, Lance. Mary, sure they could. Maud put it in there, sure. Maud actually said what I was thinking before I said it. Sure they could. So what's that going to do to the value of your bond that doesn't increase in rates? It was sold to you at 3%. That's your coupon rate. Where does that value of your bond fall into a 3% 30-year Treasury bond versus a 4%? Which would you rather have? Of course, we all rather have the 4%. So this is where bondholders tell you their crock of you-know-what. Their crock of crap is, well, be in it for the long term. You don't lose any money as long as you don't sell your bond before that 30 years is up. That's bogus. You lose opportunity cost. You lose the value of an investment that could have traded 33% higher and 33% higher for the next 28 and a half years, while your investment, unfortunately, is lower. So what happens? Well, your bonds lose value. What you paid $101 for in 2 years, you might sell for only $95 because there's better opportunity out there. Let's do the math. What you bought for 101 and paid a brokerage fee of usually 1.75% is 2 3/4, if not 3 to 4% with fees. You paid 4% to be in that bond. You're going to lose 4%. You won't break even till after the first and the third of a year on your bond. Everything after that is profit for you. But you also lost 6% as you have to sell it now for $95 because it's no longer as valuable that bond over a 2-year period cost you 10% to be in. You only made 6%. You lost 4% on your bond as you're shuttled or portfolio balanced or new opportunity, better returns. You get your bond money shuttled into another investment. Some people might even use that nasty word called, anyone know what that word's called? When you're just picking investments back and forth? There you go. Churning. As a registered investment advisor starts to churn your portfolio. The biggest reason I hear people talking about getting into a new bond, a new fund, all those kind of things is, hey, I'm going to churn your portfolio for a better return. But if you churn over a 10-year period, a portfolio 4 or 5 times, I'm going to use 5 times, you could be down 20% on your churned investments that are fixed income positions. My comment to my advisor on the sale of a business and my money in the stock market, how the hell do I lose money on a fixed income, on a fixed return investment? They're supposed to be zero risk. You told me to stay in it. Yet in 2 years, you churned me out of it for a 4% loss. I think I coined the phrase WTF. I didn't use it as a 3-letter acronym. I was yelling it across the phone. Oh, don't worry. The next stuff's going to be better. Oh, don't worry. It won't happen again. Of course it happens again. That's the problem with having your money with big box investments. They don't get to think for themselves. They don't get to work in what's in the best interest of the client. They work in what gives them the most commissions that their manager tells them to push people into. I am not a fan of big box investing. I particularly am not a fan of Vanguard. And it really comes down to these type of investments. So bonds can be risky. Of course, Warren Buffett won his bet. Beating hedge funds. Hedge funds really made their big money in 2008. And I don't know. Being in the stock market as a buy and hold really puts you in a lost decade or 12 years. I think 2008 has, if it's done anything, has told us that we need our money managers to care more about the money and less about the way they used to do things. As Kipling poem, and obviously said investors shouldn't use borrowed money to buy stocks. He's obviously referring to the cryptocurrencies. There have been some pretty speculative new IPOs that have come out, something like Snap and so forth. Twitter. As he talked about borrowing money, he's as I listened to what he said, it really comes down to just because you've made some money the past couple years on it doesn't mean that trend's going to continue to follow. I need to make more huge acquisitions. It's actually 116 billion. I think I said 136 billion, but 116 billion dollars because he can't find a profitable, I mean, that's not the word to say, a cheap investment, an investment that's down, that's not overpriced by a valuation metric. $3 billion from the hurricanes is important. Here's my new favorite quote. Insane to risk what you have to obtain what you don't need. Unbelievable. Some of the people who have taken mortgages or borrowed money out again to put it into cryptocurrencies. I am a believer that we have worked too hard for our own money to truly gamble it in the stock market. Yes, I am willing to not be an S&P for a year if my stuff is protected, knowing there are going to be times when things are going to fall where I can pick up more shares. Most recently, shares of Ford were picked up. Shares of Baidu were added. If you had more than 1,000 shares, one more big drop on Baidu, and for even people with 400 or 500 shares of Baidu, I can add more shares. There's one other one that I was able to add shares to, and for the life of me, I can't remember. CarMax. CarMax was another one that we were able to add some shares to with the drop down. There are 3 or 4 of you that have 1,000 shares there. Why do you make a big deal in 2019? Obviously, they're for standalone businesses or businesses in general. Returns to operate the business, returns are not attractive at this point in time. Tax cut obviously was more than he made. So again, I found it very interesting. For those of you that are here for the first time, I love collar trading. I love using the ability to amass more shares of stock without having to come up with extra money to do so. The protection that's given to you in a long put, the right to sell your stock at a certain price or a certain period of time, acts as insurance and gives you an amazing ability to amass huge amounts of shares of stock over a long period of time. Shares of stock that you can hopefully be getting dividend payments for down the road. Shares of stock that you can short against for income down the road when you're not making as much money or you retire. Last week I put an interesting article in, but I'm going to go to the top of this one. It was from Mark Cuban. One of the great lies in life is to follow your passions. Out of curiosity, how many of you were told to follow your passion? Do what you love, because you're going to be doing it for years. I'll be honest with you. I grew up hearing that. I probably have even said that to some people. 2 just comments came in. Nice to say, not so easy to do. The other comment was, shouldn't lie to kids because it takes more work to be able to make a living using your passion. It takes more work to make a living using your passion. That's an interesting comment there. There are some people that are not meant to be traders. There are some people that the emotional side of trading is too great for them. That over an extended period of time spend too much money on education, still make mistakes on placing trades. There are some people that, plain and simple, with all due respect, trading is probably not one of the best positions for them to be in. No matter how passionate they are, you shouldn't be in the stock market to lose money. You shouldn't be having the stock market taking losses in portfolios as an education on how to make money in the stock market. I read this, and I'll be honest with you guys, because my wife and I talked about one of my boys. One of my boys who has plenty of intelligence to get some decent grades in school. plenty of intelligence to meet the mold that we've created for what our kids are going to grow up to be, to where he could be a doctor, he could be a lawyer, he could be in advanced schooling that will make him a bigger starting salary and earn him more money than a high school graduate salary. He's very passionate about a lot of things. And we've had to sit down a 14-year-old boy and let him know and understand that the road that he is on in high school and the grades, as passionate he is about playing drums and playing basketball, and last year it was on debate and lacrosse, as passionate as he is in those things, getting F's in your grades because you don't turn all your homework assignments and are only testing at a high C level have set him up for a path where he can be passionate about things he's going to like in life. But he will most likely not have the time nor the income to truly expound those passions or become great at those passions or use that passion to provide an income for a family or for himself. I read this article and it hurt me because I'm passionate about a lot of things. I have probably told people you have to be passionate and you should love what you do for a job. But that doesn't mean, as I read this article, that that's the way real life is. Real life is different. In fact, you guys, I'm going to have you take one guess. What's one of the biggest lies in the trading world? I actually just thought of two. Man, now I just thought of three. What are some of the biggest lies, cliches, passions about the stock trading markets? There you go. The market's always go up. So, Maud, I'm going to change that a little bit. If you listen to CNBC or Bloomberg or Fox News, those are my three that I listen to, CNN sometimes, it's always a good time to buy a stock. And it's always a good time to buy a stock that they are mentioning there on TV, because it usually gets a bounce and then smart money sells off and it loses more than it should when it opens 2 days later. One of the biggest jokes in the stock market, stocks go up over long periods of time. That's not true. Indexes do. There are plenty of individual stocks that fail, that get booted out of indexes like the Dow, like the S&P. We're on a really bad year, they get booted out, something else gets replaced, and their quote-unquote yearly returns look a hell of a lot better than anyone could really do because they replaced a poor-performing stock with a great-performing stock. They don't count the losses on the stock. It got booted out. One of the other biggest ones is my first one I thought about. Hey, you can make a monthly income in the stock market. BS. I haven't seen anyone do that yet. Eventually, you run into a 4 to 6 week period of time where the trends change and you're adjusting for a break even or small losses or smaller than full maximum losses. Kevin, how can you say that? What about Jeffrey? Yes, Jeffrey does the best out of the best with safe option strategies. But you really need about $1.5 million to do all the margin. No, he's honest and he doesn't try to pull the wool over your eyes. He tells you he's not in every trade. But if you want to be in every trade Jeffrey does, you need about $1.5 million, be willing to take some stock ownership, and $1.5 million to maximize commissions at 10 10 contracts a trade, it's $1.5 million plus that you need to have to place every trade that he does throughout the year. How does he do so well on some of those trades? Well, I told you up front, they're all placed in a quote unquote paper trading account. Some of the trades, when you're not in it, you don't have the emotions of fear as they lose half their value. You'll notice on some of his trades, tight stops, limit orders, those are more the ones that he probably has with his real money in it. Another comment, if I can make about Jeffrey's trading, boy, are you guys lucky that he is integrable as he is. If Jeffrey and I get down and sit down together, I'm telling Jeffrey, you idiot, why did you not close your trade today? Well, because I need to post it. That's not true. It's an advisory. Close your damn trade. Make a great return. Well, Kevin, I choose to trade when my clientele trades with me, when my student base can close out a trade when I do. Jeffrey, you're not allowed to be trading with them, for them, knowing that they're placing real money on it. Kevin, I know that. And I don't know if people are placing real money or not. But in case that they are, I'm going to trade my money with my student base. On his NVIDIA trade, I could have smacked him upside the head. He could have closed out during the day when it was up at $15, was only at $9, finished down $3 the next morning when his trade closed. In my interpretation, he missed out on $9 to $11 that the stock had fallen, that he could have closed it out for more returns. It's amazing to have an educator that gives his students preference over himself in booking profits. Another one that I've heard, day trading's profitable. Well, with all due respect, I've yet to see a day trader profitable 2 years in a row. Going to ridiculous amounts of trade shows, offering $2,500 cash, probably 34,000 people. I have yet to anyone collect $2,500 cash that I offer up. There are a lot of farces in trading. And one of them is following your passion, because in all honesty, it's more important to make something than nothing. And it's more important to protect what you have than lose half of it or all of it. A very interesting article that got me passionate and had me rethink the way I am looking at some of the things that I have said and done to people. I put obviously a Facebook article in here, partially because I trade Facebook, partially because it's been a rough month, but we did take some good profits off of protection on Facebook. Way to go to a business owner. And again, I guess it's easier when you have $14 billion. Way to see someone do it their way. Way to have someone say, you know, it might hurt my stock price, but with 14 billion, so it goes down to 10, right? Pretty sure he's not going to miss a mortgage or not eat for a day. Way to go to have someone put a company above and beyond his own personal returns. I thought that was very interesting. I also put an article at the start. Let's see. Goldman Sachs, he's ready to get where he could push Sullivan's debt. That's just something for you guys to read. I was going to start out last week with volatility. And what I wanted to talk about How do you want to talk about vol today? I want to go through volatility. Good thing I have the ability to spell at all. Volatility. Plain and simple, it is the movement of the S&P, the VIX, over the next 30 days. There's volatility. Well, Kevin, volatility is the movement of stocks up and down. I'll give you that. I'll give you that and do a movement of stock prices up and down in a quicker than expected manner. Flash crash, program trading, stop loss drops. There's a bunch of things in there, right? News. There's a bunch that can be put in there. But the question is, what do you do? What do you do? And that's interesting because if you sell, without a doubt, you know it will most likely, this is a probability trade, right? It will most likely, probability, that the stock will close higher than the price you sold it for that day. Stop losses. Come on, Hurley. Stop losses are a market order when a stock drops below a certain price and in no way guarantees the sale at the price you indicated in your order. Usually stop losses are triggered on an uptick rule. They'll get filled on the uptick after your stock has passed through a price. Oh, how many people got hammered? Too pricey. I just can't spell worth beans today, guys. I'm sorry. Too pricey to buy protection when it is happening. You need to sell premium. Well, Kevin, you sold premium at Disney at 110, and yesterday it was above 110. I don't think so. Came up and touched it. I sold my premium up at a resistance level when the you-know-what was hitting the fan. Did it with Baidu. Did it with Apple. Already in it for Visa. Did it for Ford. Did it for American Outdoor Brands Corp. Boy, talking about a stock that's getting killed. I wanted to get the you-know-what out of American Brands Corp. It's fallen so low, it's a screaming deal. I actually need to go protect it down at $9 tomorrow for earnings on Thursday, I believe. Yep, earnings on Thursday. They only need to make 9 cents. And as long as they give any positive news, American Outdoor Brands is going to be a great position that I'm going to have to add some long calls on. Well, why wouldn't you just sell your shares? Well, if I sell shares and then add long calls, the wash sale rule will not allow me to count those sales as a loss. So I was going to get called out. 2 weeks ago, I was going to get called out, leave it where it was at. It since went from 10 up to 11, now at $9.30. Need to stay in it. I'm sure I've got some clientele that are going, Kevin, what the hell did you ever see on a valuation level and on a differentiating of revenue streams? They were an excellent purchase. They are not so right now. So is what it is. Pretty interesting, but yeah, I'm going to be stuck in American Outfitters Brand Corp for probably another 6 months to 9 months. Great opportunity there. I will actually add long calls to make more money to the upside. They'll have to be leap long calls, but it will be a good bounce when it starts to bounce. So in the last couple of weeks, today included, pretty big down day, but if I was to ask the group today, did today matter? Did today matter? Well, Kevin, what the heck does that mean? Still bullish, right? Still bullish. 50-day simple moving average held, and we only gave up yesterday's gains. Pretty interesting. If I can make a comment, the 1 month return for the Dow has been down negative 4.53%. Not too bad. That's more from the highs, but the 1 month return from CNBC down 4.53%. I'm going to copy this because, well, Kevin, I'm going to hold you against the S&P 500. All right. This week, still bullish, and the S&P 500 return is, for the last month, down 4.48%. And that was at the close of the market today. But you know what, Kevin? I'm going to hold you against an index that is the best index out there. Really? All right. Well, still as bullish as well, and they were down 2.34 1 month return. Numbers all gotten from CNBC. Taking a quick peek. Man, about time. About time we see a pullback. We're so overdue for a pullback, it's unbelievable. What I don't like, couldn't close below 10%. Man, we're coming up too fast. To a certain degree, it makes this pullback insignificant. It didn't shake anybody out. It was, in all essence, a 2-day pullback. I wanted more. Too complacent. S&P, exactly the same thing, but something significant happened on the S&P that did not happen on the Dow. Someone tell me what significantly happened on the S&P that did not happen on the Dow. What happened on the S&P that significantly did not happen on the Dow? See a couple question marks coming in. Not a deeper sell-off, but that is a good start. There you go, Mary. Not only did we break, but I'm going to call it a test. We tested the 200-day moving average. And what a bounce we got from 25.20. We tested it, and we came right back up. I'm shocked. I have no idea where the buyers came from. I found it interesting for the returns that the U.S. markets have had, where emerging markets, where European markets are better, all the blah, 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 blah that was said out there. Wow, we nailed it. We did amazing. Not only did we test the S&P 500 200-day simple moving average, we bounced off of it like a rocket to the upside. Kevin, why is this important? We will have a more volatile year than last year, obviously. But I see the returns that we had last year from this one day, even though one day doesn't make a trend. I see another high double digit in the teens, maybe the 20s, but probably the teens, 16, 17, 18% yearly return on an index. How awesome this opportunity is. Technical analysis, but the technicals are based by two fundamentals. Somewhere there are still buyers out there, money coming into U.S. markets, and two, tax cuts have not entered into the E part, the earnings part of companies. We will still see earnings beat on a earnings per share basis. We should still be able to see a beat on a revenue because they have more money to promote their products down the line. Very exciting. Kevin, what about the NASDAQ? Can't leave it out, right? Obviously, the NASDAQ performed better, but not, it is what it is. It is what it is. I didn't see exactly the same. It's just there. It's just there. As we go through, I'm going to put March down another 3%. I started out with down 2.5% on the S&P for April. It's not counting tomorrow, but we're down 4.4. We probably will finish the S&P down 3%. That's where I finished April, guessing where it was going to be. March, I still think we'll see a down March. Guys, I think we're going to see a down April. A lot of people didn't sell off their gains from last year and will do so to pay taxes this year. If I see a slow to stagnant start to the year like we're having after January, right? It probably bodes well for the sell and may go away. We might see the bulk of our gains come up in a low volume summer this year. We've seen it on past years. A down first quarter bodes well for a good, really, I'm going to call it second quarter of the year, but it's really the third quarter. It's a good summer that we could have. Earnings, we're running into the first week of our retail earnings. Not a big retail guy, but if you take a peek, Tuesday, not really earnings, but Amazon, Macy's is there, Toll Brothers for the Home Builder, Hertz, TiVo is what that one should be, I believe. Wednesday, Chico's, Crocs, Lowe's, Office Depot, TJ Maxx, LB Brown's, Monster, CRM. Thursday, AMC, the movie theater, Bud, which is Anheuser-Busch, Best Buy, Burlington, Kohl's, Gap, Nordstrom's, VMware, Big Lots, Foot Locker, JCPenney, JD.com on Friday. More is happening by way of economic reports, some pretty good economic reports, but I don't have them. So give me a quick second. I can't believe I did this. I also waiting to see if they post. Come on, Coach Simmons. "51 minutes ago, he posted that they need a field because of the snow, but he didn't post the cuts for the team." This guy is killing me. Absolutely killing me. A rather busy day, and I can't believe I did this, but I, for some reason, did not write down the stuff today. New home sales yesterday, 593, disappointed from the 645. If you looked into why new home sales was down, they're linking it 100% to the rise in interest rates. I guess you can, but I don't think that is the reason. Durable goods, instead of being down 2%, was down negative 3.7. I kind of want to tell you that should be expected. It's the first quarter. People are kind of restocking after the holiday season. But when you see the durable goods ex transportation also missing by 0.8%, really not good at all. I don't track international trade in goods. It's, for me, a useless, non-moving announcement. But the Case-Shiller came in at 6.5 versus 6.4. So here we have contradictory, right? Case-Shiller. What is the Case-Shiller report going to tell you? Anyone know? What's the Case-Shiller home pricing index going to tell you? Yeah, if the value of homes is still growing, if it's increasing for the value of your home, right? Are they selling higher than they did last month, year before? The FHFA pricing came in right in line, 0.3 versus 0.4. Consumer confidence still ridiculously high at 130.8. I remember the times when it was in the 80s, 88, 91. So obviously durable goods disappointed today. New home sales, which means tomorrow we need to pay attention. And in all honesty, our futures will be set by China. As we started this, the CFPL Manufacturing Index, which is obviously the non-biased, if you ask people are looking at the world, the non-biased China's manufacturing numbers, that will initiate our futures most likely. Actually, as I'm taking a quick peek, Asian shares edge down following Fed Chair Powell's testimony that they're going to be on track for more earnings. That report hasn't come out yet, so I guess we're going to be waiting. Tomorrow morning, though, you will see personal income, personal spending, And pending home sales. Well, wait a second. Tomorrow is Wednesday. GDP and pending home sales are what's going to be moving the market futures tomorrow. And that'll be the big movement on, are we back to 2.5? Can we beat a 2.5 estimated GDP? Anything higher, even by a bit, we're going to recoup what we lost today. Thursday, personal spending, personal income, and well, I guess I'm saying construction spending, but the ISM index will move us. Friday, Michigan sentiment. You could see a deeper sell-off tomorrow. End of the month, final selling, free balancing for fun. See a bounce up Monday, Tuesday, Thursday, Friday, the first 2 weeks of the month. If you were to ask me where we're going to end this week, I would say higher. And higher is going to be because of the sell-off. Just rebalancing of funds. The sell-off is probably expected tomorrow and the buying in on Thursday and Friday. How am I looking to trade? Plain and simple, last week with options, expiration, cashed in, long puts, added shares, added short calls, and have yet to add long put protection. And that's mainly because we're going higher than we're going higher on an index or a mass market moving type way. So with that said, I know I've talked a lot. We're already at our hour just about. Questions that you guys have for me, questions that I can answer for you guys in general in regards to anything about anything. Let me give you a couple seconds to get something typed in. Apple. What do you mean, Apple? That's the Apple ticker symbol. Mary, what do you mean about Apple? Is Apple a good buy? So there's a loaded question. Is Apple a good buy? Mary, I am in shares of Apple. I think right now are only with a shares and or a 190 March short call. I am choosing 190 because we hadn't quite got to it. I was going to choose 185, but my thought is Apple would go up to 190 after their earnings. Instead, they were brought down by the market. I don't know how many billions of shares they can buy back with their billions of dollars. But if Apple thinks they're a good buy at 150, 152, the 200-day at 160, 170 for the 50-day, I would expect, and I have been sprinkled amongst accounts, not many, I think it's about 8 or 9, 2 contracts of 175, 190 bull calls. I'm about a break even right now. So I'm looking to see them go higher. And I think Apple is still relatively cheap because of their cash hoard, not necessarily because of their future earnings per share. I think they'll make money. They are trading as a commodity type stock, as a value company, but I'm going to tell you, Mary, I think they have more upside, yet I don't have a compelling reason to tell you so other than their cash hoard. It should be on something like growing revenue in iPhones, growing revenue in iPads. The services department would be where their best growth revenue is. In all reality, I don't see any of that other than the services department, but the services doesn't seem to have the overall net effect that Wall Street wants. So yes to Apple, great dividend. I still would like to see a one-time special dividend offered, a raise in their dividend twice a year would be nice. But yes, I don't think you can go wrong with Apple. You do not trade it, you invest in it, and obviously protect it through earnings. It can really move one way or the other. Any other questions there on Apple or in general? All righty. Hey, if I don't see anything, then guys, I want to thank you for your time today. I look forward to seeing some more opportunities to come up. But if Warren Buffett can't find any opportunities, I've said it for a while, I kind of fall in his camp that I'm not sure where they're at right now, but I am always looking. I appreciate being here tonight. You guys have a great evening. I will get this posted sometime tomorrow, probably not till tomorrow after the market closes. Pleasure being with you tonight. Glad to have you here. Glad to be back. I apologize once again for last week, and I look forward to seeing you next week as well. Have a great evening. Bye-bye.